So what do you need to know about the investment deduction? These are the most important points. Point number one, so we call them point to note. Number one, that it is granted in manufacturing only. The key thing being this one, manufacturing. That we normally give the investment deduction for those businesses that do manufacturing only. So if you're not doing manufacturing, you cannot claim investment deduction. So which are these types of these businesses? These businesses are, if for example you have a company that manufacture bread, manufacture flour, any business that convert the raw material to finished goods, then you are in manufacturing, and so you can claim the investment deduction. Meaning those businesses that do not do manufacturing. For example, bank, insurance company, transport or traveling companies, for them they cannot claim investment deduction. So it is only for manufacturing businesses only. First item. Second, it is granted at the rate of 50% in the first year of use. Then 25% reducing balance from the second year. From second year. So the key terms being 50%. 50% in the first year. And then 25% reducing balance. Reducing balance. And then from second year. What does it mean? This is what it means. That once we did identify those items that we normally give the investment deduction, in the first year, you take 50% of the costs. And then when you get to the second year, you'll be doing 25% on a reducing balance. So you minus the investment deduction of the first year. You get to the third year, you do 25% of the costs minus investment deduction of the first year and the second year. You go to the fourth year, you take 25% of the cost minus investment deduction of the first year, second and third, that way. So that will mean, for example, if we are going to see one of the items that qualify for investment deduction is the cost of factory building. So if you have a factory building, for example, which costed 100 million, and somebody asks you to get the investment deduction of the first year, then you are supposed to say is 50% of 100 million. That gives you 50 million. So 50 million will be used as the investment deduction in the first year to be used to reduce the taxable income of the first year. Now, when you get to the second year, if somebody asks you to get the investment deduction of the second year, remember we have said is 25%, but on a reducing balance. Reducing balance means we take the original cost, 100 million, and we minus the accumulated investment deduction. For this one, it is only for the first year, 50 million. So that means the residue is 50. So we take 25% of 50, in which case we are going to get, that is 12.5 million. You go to the third year. If somebody asks you about investment deduction of the third year, then you are going to do the same. You take the 25% of the original cost, which is 100 million, minus investment deduction of the first year, 50 million, minus investment deduction of the second year, 12.5 million. So you get the net here, you take 25%, then you'll be able to get the investment deduction of the third year. You go to the fourth, you continue with that process. So the most important thing there is that it is 50% first year, then 25% reducing balance from the second year. Another point that we need to know about the investment deduction, point number 3, is the costs qualifying for investment deduction. So what are these costs? That when you come across them, you know this one I'm supposed to give the investment deduction. We have A, the costs of factory building, factory, or industrial or manufacturing building. So if you have the factory, cost of constructing the factory, putting up the factory, also called industrial or manufacturing building, that cost is supposed to be granted the investment deduction. 2, costs that assist to use the factory building. If there is any cost that is incurred that assists the usage of this building that we have talked about here, we give it the investment deduction. What are those costs that assist? We are talking about the parking areas. So we can talk of IE, parking areas, sewerage system, railway system, water and electricity system, So all this one, we can also add roads, etc. If you look at all these items, normally assist to use this factory. Like parking area where you can park, for example, a vehicle to load off-road finished goods or raw materials. We have the sewerage system to clear off the system, the factory, of the waste products. We have the railway system to transport water and electricity to help the manufacturing to continue. The roads to supply the goods or to supply the raw material to take the finished goods to the market. All these normally qualify for investment deduction, as we have said. That is number 2. Number 3, cost of machine used in manufacturing or machines that assist in manufacturing. So we are talking about machines that are used in manufacturing and machine that assists in manufacturing. When you talk of the machines that are used in manufacturing, these are the machines that assist to convert the raw material into the finished goods. So what are the examples of that? E.g., we have a processing machines. These are the ones that convert the raw material into the finished goods used in manufacturing. And then those that assist in manufacturing. So we continue. For those that assist in manufacturing, we have generators. Generators are used to provide electricity when, for example, there is blackout for example, there is no electricity that is provided by Kenya Power, then generator will be there to provide that. We have water pump. That is to pump water into the system. So it's a machine that pumps water. We also have the treatment plant. Treatment plants. In case there's some waste product that need to be treated before they are disposed of. We also have the conveyor belts. Conveyor belts. These are used to transport an item from one place to another as it is being processed. So all these assist in manufacturing. They normally qualify for investment deduction. That is number 3. Then we have number 4. Costs incurred. Cost incurred on the above machine, but before use. So we are saying if any cost was incurred to acquire this machine, but before you start using it, it qualifies for the investment deduction. So what are those costs? For example, when you are acquiring the machine, you normally incur transport costs, so i.e. transport costs, insurance costs, loading, off-roading costs, and off-roading costs. Testing costs. Sometimes you may be required to test your machine before you start using it. Testing costs. In that case, you call maybe an expert who come to help you in the process of testing. So all these costs, as long as they are before use, they qualify for investment deduction. Another good example we can use is the repair costs before you start using a machine. You may buy a machine and realize that it is damaged somewhere. Call a repair person to come do the repair, and then you pay that person. As long as you have not started using that machine, that is supposed to be part of that machine. Actually, in accounting, we normally call it capitalization, that we normally add the cost to the original cost of the machine, and then it becomes part of the cost of that machine, and then we claim the investment deduction on it. But if you incur repair after, let's say, 1 month or 2 months or 3 months, those one will not qualify for the investment deduction since you have already started using that particular machine. So that was the 4th one. Then we have the 5th one, which is supposed to be cost of borehole, water tank, and security wall. That in the process of doing your manufacturing, at some point you may require water. So you sink a borehole. You call for a person who can sink, or a company that can sink borehole for you. You pay for it. That cost qualifies for the investment deduction. Water tank for storage of water. Also, we have the security wall around the factory. All these one qualify for the investment deduction. So that was the D. That is supposed to be the E. The cost that qualify for investment deductions are those one. Now remember, we were looking at the points to note about the investment deduction, and we were here. So we have the 4th note that you need to consider. Number 4, costs that do not qualify for investment deduction. Yeah, so these are the costs which, when they are incurred, you cannot claim investment deduction on them, although they are incurred in the process of manufacturing. 1, we have the cost of land and land-related costs. So the land in which you put up your factory, you must have purchased it. So the cost of purchasing it, don't give it investment deduction. It doesn't qualify. Now, when you are purchasing, maybe you incurred some stamp duty, title processing fee, legal fee to acquire that land. Also, don't give it the investment deduction. It doesn't qualify. B, we have the costs of non-manufacturing. Part of factory building. In this case, you normally find sometimes a manufacturer can construct one big factory. Now, factory used in manufacturing, then subdivide it, and part of it is used for other purposes other than manufacturing. For example, this part can be used as staff quarters. This part can be used as an office. This part can be used as a warehouse. These parts mean that they are not used for manufacturing purposes. So you need to deduct the cost when you are claiming the investment deduction. So if you are told the cost of the whole factory is 100 million, the whole of it, 100 million, you must now ask, how about this part? How much did it cost out of 100? If you are told that it costed 20 million, so when you are claiming the investment deduction, you take the 100 million minus 20 million, that is 80 million. Then you start claiming the investment deduction as what we indicated there, using the rates that we indicated. So we can say, i.e., example of non-manufacturing part of the building are warehouse, offices, staff quarters. We have the exhibition halls, etc. As long as a part is not used in manufacturing, it doesn't qualify for the investment deduction. And that is the last thing that you need to know about investment deduction, the costs that do not qualify for investment deduction.